Income tax 2020. Adjustments to income, alimony paid. Come in, relax with income tax 2020. Adjustments to income, alimony paid. When considering the income tax equation with regards to the alimony paid, we're taking a look at the second line item, the adjustments to income, thinking about our income tax equation as having two halves. The first half, in essence, a modified income statement. The second half, then, the calculation of the tax and then application of the payments as well as the credits to get on down to the tax refund or the amount that is due. We're going to be focusing up top on the income statement half of the income tax equation. On line 2, remember these can be considered basically above the line deductions as opposed to or contrasting to the below the line deductions, which would be the greater of either the standard deduction or the itemized deductions. Many names for these above the line deductions. They're now on Schedule 1, so you can call them Schedule 1 deductions, above the line deductions, deductions for adjusted gross income, or you can think about them as adjustments to income. So you can call them adjustments to income because they're going to be adjustments, even though they're kind of deductions, to get down to that adjusted gross income line item, which is a stop along the way, kind of like gross profit for a income statement or a multiple step income statement to get down to basically what would be equivalent to net income, which in this case is going to be the taxable income. So adjustments to income considering the alimony paid. We're going to be on the 1040. We're going to be looking at the 1040 once again in line 10. So we're on line 10 here on the 1040. I know this is small here, but I want to see the full form. And then in a following presentation, we'll take a look at this in detail with the tax software, zooming into the actual line items for it. So we have this adjustment that's going to be flowing through from the Schedule 1. That's going to have an adjustment to the adjusted gross income on line 11. That's going to be supported then by Schedule 1, Schedule 1 Part 2. So this is the second half, Part 2 of Schedule 1. We're going to be down here on the alimony paid. Alimony paid, so we got the alimony was paid from one ex-spouse to another ex-spouse, basically for support. We'll get into the details of the alimony paid. There has been changes recently in the last few years related to it, so you want to make sure that you understand the rules with regards to paying current alimony and with regards to any divorces that are going to happen in the future. If there's some issue in the future and you're thinking about a divorce situation, then what's going to be the effect for the income taxes for it? And if you alter an existing divorce agreement, then what could be the impact if you make alterations to, say, alimony with regards to taxes, because it can have, of course, a significant impact on the arrangement. So, but in any case, to put this in the system, typically you got one spouse paid the other, and the idea being that they would get a deduction for it, and then you got the social security number of the person you're paying. You're telling the IRS, hey, just like a 1099 or a W-2, this is the person I paid. If the IRS is going to allow you the deduction, they will typically want income from the recipient, this being the receiving spouse of the alimony. And again, there's changes to this rule here that are fairly recent as to whether or not you can have the deduction and or whether or not the income needs to be included as well. So it depends kind of on the dates of the agreements at this point in time. So 3 potential payments in divorce. So when you think about a divorce situation, remember you can basically break down the payments into 3 categories. Typically, they may not be defined specifically this way in the divorce, although more and more they kind of should be, because it's known that these effects or these impacts will be there, and then they will have specific impacts on the tax returns as well. So when a divorce agreement is put in place, they should be taken into consideration and using language that's clear about the tax consequences of it, because the tax consequences have a significant impact on the arrangement. So in any case, typically you're breaking the payments out into possibly alimony, child support, and property settlement. So of these 3 items, notice that the alimony is the one that could potentially have tax impacts basically in the future as the payments are happening in the future. So for example, a property settlement is basically, you can think of that as basically the 2 individuals in the arrangement are basically splitting up what previously thought of as, from a tax perspective and a state perspective, are the property owned by one entity in essence, even though, you got different people might have different accounts and whatnot under their name and so on and so forth. From a state perspective or from the IRS perspective, you're kind of considering them once married as basically one entity for the most part. And then when it breaks up, then, or if it breaks up, then you're going to have then the property settlement, which is the distribution of the items, assets, liabilities to the two individuals, the spouses involved, and there shouldn't be a tax consequence on that because it's not income to one spouse or the other. If you consider it from the perspective that when they were, in one entity for tax purposes, then it was one entity that you're just splitting up into two now, and therefore there shouldn't be, like an income consequence for tax purposes there. Then you have child support, and child support could be a future payment. So that might not be the actual property settlement. That could be coming in from one spouse, say, earning revenue in the future. So revenue that wasn't there possibly when they were together and isn't part of the property settlement, but is a future payment that's going to be made from one spouse to the other. And therefore, you got the question then of, well, should that be income to the spouse receiving it, since it's future income after the point in time of the divorce, or should it be not taxable? And then the person that's paying it, should they get a deduction or not? Now, child support, typically, even prior to any changes in the law, if it's categorized as child support, was typically something that was not having a tax consequence, meaning the person that received it then typically wouldn't have to include it in income, and however, the person that paid it doesn't get the benefit of a tax deduction when it's paid. And then you've got alimony, which is going to be a support payment, so from one spouse to the other, and it's going to be separated from child support, and that's the one that could be a future tax payment, meaning it's not part of the original settlement, it's not part of the breaking up of the assets at the point of settlement, but possibly future income that's being paid from one spouse to the other. And that's the one where you could say, well, now under the law, there could be situations, or in prior settlements typically, there could be situations where the person paying then might get a deduction, and then the person that is receiving might have to record it in income. So prior to basically the changes in the law, if there was a new divorce, then there would be debate over possibly whether something is categorized as alimony or child support, because if it was child support, it has advantages to the person that's receiving it because they don't have to include it in income. And if it was categorized as alimony, then it could have benefits to the person paying it because they get a deduction, but the person receiving it, of course, then has to record it in income. That's how the taxes will typically work. So you can see how this kind of complicates to have this taxability of alimony kind of complicates, and this breakout between child support and alimony, the complication of the divorce agreements. So a few years ago, they basically said, okay, we're going to remove that taxability of alimony. We're just going to take that out of the equation. We're going to treat it kind of like we treated child support before, meaning any divorce agreement from this point forward, we're not going to be charging, let someone take a deduction for alimony, the one we're talking about here, and we're not going to require someone to record it as income. And that should simplify the negotiations to make the tax planning a little bit easier. However, if the arrangement had happened before the change to the law, then you can't really change it retroactively because the two parties had already agreed to the tax consequences of the categorization of alimony and child support. Therefore, before that deadline, that's when you might still have the deductibility of alimony. If the divorce is fairly recent, then alimony should not be something deducted. And notice that the software will help you to kind of make this determination as well, because you'll have to put the date in the software, and it'll help you to categorize whether or not the alimony is something that would be deductible or not. Obviously, from a practical standpoint, if alimony is something that might be deductible or have to be included in income, you may not get like a 1099 or anything like that. You're not going to have documentation for it. It's something that you got to be aware of, or the person that is either taking the deduction or has to include it in income will probably inform you of, and you'll be able to take a look at the prior tax return, whether it was done in the office or someplace else, to see if there was alimony or whatnot in the prior year possibly, and that can help you to make the determination in the current year. So alimony is the only one that could have tax consequences typically. So the requiring of one spouse to make payments to support the other spouse. So one spouse is making payment to support the other spouse, and then must be cash payments. So typically when you're talking alimony, you're talking cash payments, must require under provisions of the divorce agreement. So in other words, if one spouse just basically decides, hey, I'm just going to give money for whatever reason to the other spouse, you can't just simply claim it as alimony if it's not part of the divorce agreement. right? You can make the payment, but you can't just say, I just added tax on some alimony and now I'm going to take a deduction for it. It's got to be part of the required divorce agreement, typically, to be considered alimony. Payments must end at the payee's spouse or death, spouse's death. So what happens is, if one spouse is paying the other spouse, sometimes the divorce agreement wasn't clear, it might not be clear as to whether something is alimony or not, and they might do that intentionally, to try to, But in any case, one of the things that people then looked to see whether something should be categorized as alimony or child support was whether if the payments ended at the spouse's death, then clearly it was for the spouse at that point, and that's how you can help to basically make the categorization. So if you needed to go back into the to the divorce papers and whatnot and research that, you can look into that. But the more recent divorces then have this change in the law, which hopefully will make that easier, make the divorce process easier, make the paperwork easier, make the interpretation of whether it should be alimony or child support either easier to determine or possibly more irrelevant, at least for tax purposes. So alimony or separation payments paid to a spouse or former spouse under a divorce or separation agreement, such as divorce decree, a separate maintenance decree, or a written separation agreement, may be alimony for federal tax purposes. Alimony or separation payments are deductible if the taxpayer is the payer spouse. So the alimony is the one that the payer would get an advantage of if they could deduct it. They would want to deduct it. If they make the payment, they'd want to deduct it. So receiving spouses must include the alimony or separation payment in their income. So that's going to be the downside. Obviously, if the person that's paying it gets a deduction, then that would mean the person that received the income, just like normal transactions, the IRS is going to say, we want you to include it in income, and that's where the tax will be applied. Beginning January 1st, 2019, alimonies for separate maintenance payments are not deductible from the income of the payer spouse or includable in the income of the receiving spouse if made under divorce or separation agreement executed after December 2018. So there's your cutoff date right there. So if the divorce happened after December 2018, December 31st, 2018, then you would think that, for at least for tax purposes, there's not as much of an issue as to whether something's alimony or child support. The law basically says we're getting out of the business of trying to interpret these things in the divorce. One payment's made to the other spouse, between the spouse, whether it be past payments, separation of the property, or whether it be out of future payments, whether child support or alimony, we're not going to have a tax consequence on it. Now, again, you can kind of think of that as having, what's the benefit of that? The person that's paying, you could think of them as having kind of a tax burden of that, because now they're going to be paying and they don't get a tax reduction, and the person receiving it doesn't have to include it in income, so you could see them as kind of benefiting. However, the divorce agreement, if it was done right and if it was transparent before this law was in place, would have taken into consideration the tax consequences, which would complicate the matter, and they would adjust the divorce agreement to take into consideration the fact that one spouse is going to get a deduction, the other has to include it in income. So if you're aware of the fact that you do not have to, that this is the new law, it's not going to be included in income, and you don't get a deduction for it, then you can make the divorce agreement be fair on those arrangements, and it possibly might adjust, the arrangements that will be taking place. So that's why I think it's a good thing here to put that in. I think it could simplify things and whatnot. But that means you can't put it in retroactively when they already made an agreement, however, based on something being child support or alimony and the tax consequences of it, because at that time they had to make their decision based on the fact that there was a tax impact by that. So that means that anything prior to this date and time that was a divorce agreement may still have the consequences of having it be included in income and the deduction. So you got to think that the new law going forward, not an issue anymore, but prior divorces could then still have the impact of these on there at this point. And again, these laws could change like in a year, and so we'll see what happens. So this also applies to divorce separation agreements executed on or before December 31st, 2018 and modified after December 31st, 2018, as long as the modification changes the terms of the alimony or separation maintenance payments and states that the alimony or separation maintenance payments are not deductible by the payer spouse or includable in the income of the receiving spouse. So now if you say, okay, the divorce happened before the cutoff date to 2018 and whatnot, but then it was modified, you went back and modified it and made changes to basically the payments that are being made, then it might be something that would fall into the new laws, which would be that the alimony would not be deductible by the payer or included as income by the recipient. So on the other hand, generally alimony or separate maintenance payments are deductible from the income of the payer spouse and includable in the income of the receiving spouse if made under a divorce or separation arrangement or agreement executed on or before December 31st, 2018. So there's your cutoff date, even if the agreement was modified after December 31st, 2018, so long as the modification is not one described in the preceding paragraph. So if you want to make modifications to the divorce agreement and you do not want to have an impact on whether or not something is included in income for the recipient and something that's deductible by the payer, then you want to just make sure that you're not making the alterations that would have that impact. And the items, once again, being changes to the terms of the alimony or separate maintenance payments, and the states that the alimony or separate maintenance payments are not deductible by the payer spouse or includable in income of the receiving spouse.